Communication services and healthcare were the best performing S&P sectors, while industrials and materials were the worst. After the bell, Amazon, Intel, and Starbucks beat quarterly estimates. Starbucks is now raising its profit outlook for 2019. 3M sank 13%, while Tesla fell 3% on weaker sales, and UPS dropped 6% on slowing global economy. 3M suffered its worst day since Black Monday in October 1987. The industrial giant says it's going to cut 2,000 jobs. New claims for jobless benefits rose sharply last week. Mortgage rates are up for the fourth week in a row. A 30-year fixed rate is now 4.2%. And orders to U.S. factories for big-ticket manufacturing goods rose nearly 3% in March. John Lesher, CNBC.
Ace is the place with the helpful hardware, folks.
It's the Ace Buy One Get One Free sale, now through Monday only. Don't miss out on all our great deals throughout the store. Save on top brands like Scott's and Ortho. Plus get deals on other products you'll need this spring, like birdseed, spray paint, light bulbs, and more. With so many great Buy One Get One Free deals, you can't afford to miss it. So hurry in. The Ace Buy One Get One Free sale ends Monday. Offers valid at participating stores. Buy select item and get designated item free. See store for details.
It's the little things. Like finding $20 in the wash. Woo! Jackpot! Or knowing where to shop online for all the newest styles and best deals around. Stage.com, of course. Visit Stage.com today for incredible sales, our newest markdowns on clearance, more extended sizes, and even more choices. Plus, check out today's deals online for daily coupons and offers. Fresh styles, big savings, and fun perks every day. Stage.com. Little things mean everything. Offer exclusions apply.
California headline news. Investigators are still trying to determine why Isaiah Peoples intentionally ran over 8 people this week in Sunnyvale.
We still do not know what his motives were. The only thing that we can confirm at this time is that on the day of the incident, he had picked up some food and was on his way to deliver the food to his Bible study group.
So far, there is nothing to suggest that terrorism was involved. The BART Board of Directors has unanimously approved a new policy that allows for the use of some automated license plate readers in a few BART parking lots. Police say it will help them recover stolen vehicles and will also serve as a deterrent. Quarantine orders have been issued at UCLA and Cal State Los Angeles to prevent the spread of measles. Dr. Adrian Cotton is with Loma Linda University Health.
So there's a group now that don't have the vaccination rate that they did 15, 20 years ago.
UCLA says 127 students and faculty are being held while they await medical records to determine if they're immune to measles. Steve Clausen, California News.
Change can happen when you choose it. You can choose treatment and change your addiction to opioids. Medication-assisted treatment, or MAT, is a proven treatment for opioid addiction that significantly reduces the rate of relapse. Covered by Medi-Cal, Medicare, and many private insurance plans, MAT is even available through primary care doctors. Choose a proven treatment option that's right for you. Learn more at choosemat.org and choose Change, California.
In the front, we'll take out that tree, install a new fence.
You're gonna call 811, right?
Isn't that just for excavators?
No, dude. Calling 811 is for excavators, homeowners, contractors, anyone. Natural gas lines and other utilities can be buried anywhere. Call 811 2 working days before any digging project to get all underground lines marked for free.
Thanks, deep-voiced narrator.
You're welcome, dude. Brought to you by Southwest Gas.
Hey guys, this is Andrew Caravella. Just wanted to let you know that KCAA has a new listener line for all of you that have a phone. Now you can listen to KCAA in the grocery store, in the doctor's office, or when you want to pretend you're on the phone with someone just so that creeper will leave you alone. Call 720-835-3099 today and listen to your favorite KCAA radio shows. That number again, 720-835-3099. KCAA Radio, the station that leaves no caller or listener behind.
Ontario Host Lions Club is hoping you'll come out to their 10th annual We Serve golf tournament. Check-in is 11 a.m. on Thursday, June 20th at Sierra Laverne Country Club. Ontario Lions supports 7 local charities and 8 area projects. Dean Munoz is the golf tournament chair. Give him a call at 909-481-1180. That's 909-481-1180. Come on out and golf at Sierra Laverne Country Club on June 20th to support the Ontario Host Lions. 909-481-1180.
This is KCAA.
And now, ladies and gentlemen, it's time for the greatest real estate investment show ever. Here's the flip-flop investor himself, Todd Bayer.
Well, hey everyone, how are we doing out there today? This is the Flip Flop Investor Show, and I am your host, Todd Bayer, the Flip Flop Investor himself. Every week we like to get together and talk about real estate investing. I like to bring on a local investor or a local expert, or in this case, a former co-host. Ladies and gentlemen, Stephen McKee. How you doing today, Steve?
Oh, just as fabulous as ever. Thanks.
No
glad
kidding.
to be here. Nice to be back in the amazing studios of KCAA, where they spend. There's no short of expense.
Oh, absolutely.
Spent
No.
on
They
the
spared no
quality
expense.
of production and the beautiful studio layout.
Well,
and
compared to our humble beginnings back at the Carousel Mall
You mean
of
when
San
they-
Bernardino fame.
where the air conditioner got stolen
Is that
before
the
we
one?
had to
Yeah.
go on before we had to go on air.
Yeah, that was an unfortunate chain of events. And then I remember doing the show there, years ago, with no air conditioning in the heat of summer.
It was pleasant.
So it was very nice, wearing headphones the whole time. You pretty much take the headphones off and like sweat just is like dripping down your face.
It's a pleasant memory.
This is a much nicer scenario here. The studios here at KCAA are among the top among AM talk radio channels
I
in
agree.
the Inland Empire.
Yeah, no, for
So
sure. Like I
we're
said, no
very,
expense.
very happy to be a part
No
of
expense
KCAA family, as they are very happy to have us as part of their family. So, and we're very happy to have you folks as listeners. So thank you for tuning in.
Especially if they're watching a little camera thing right there.
Yeah, for those of you that are watching live on YouTube, which I'm sure is probably a numerous number of folks, paying attention.
The feed might go down though for the amount of people that are on it. So if the feed goes down for you for any reason because so many people are watching, just log back in and it'll pop right back up.
Yeah, we have to pay for more bandwidth. That's got to be it. So anyway, for those of you paying attention, thank you for tuning in. Flip Flop Investor Show. We talk about real estate investing usually, unless we're talking about past experiences as a real estate radio show host. Yeah, and so for those of you that don't know, Stephen was the original co-host on the show. Me and Steve, we did the show together. It was the Flip Flop Investors
God,
show.
Has it been 2 years?
It's been like 3.5 years.
Are you serious?
It's been a while.
Oh my God. Wow, it's
We've
been
been
a long
doing the
time.
show for some time. I think 2016, September 2016.
Oh
is when
my
we
God,
did our first show.
I forgot we started that long ago.
Yeah, it's been a while.
Wow.
And, we've had a very loyal fan base since then. We got quite a few episodes in the can. I need to find out. I was actually thinking today when we were at lunch, I need to find out how many shows we actually have done.
Yeah, I would have no idea.
I know it's over 100. It's probably approaching 2.
It's probably approaching 2.
So, I don't know. I don't know how to do math. If we did one every week for 52 weeks a year,
we'll get a
3
monkey.
years.
We'll get a monkey ride on it. Every time a video pops up, you'll tally it, and at the end of a couple days, we'll have a count.
There you go. I like the idea, but it sounds like about 300 to 400 episodes. I don't know. But anyway, more on that later because we're going to be launching a site very soon where you can go back and watch all the old episodes in addition to listening to them. Right now, you can already listen to the podcasts. You can go back onto the KCAA website, kcaaradio.com, and you can watch or listen to all the previous episodes.
We need to get them on like iTunes and
and iHeartRadio. I guess some of them are there. I don't know. We're just we're not radio show host put-on-honors. That's not what we do. We actually are real estate investors, and this is something I do once a week. And to be quite honest, and I apologize to the folks out there that I don't put in the effort that I probably should because I get a lot of people asking me where they can hear the other episodes, and I have not made it easily available for them. So we're working on something, so it'll be available soon.
Doing something that's easy for everybody else is usually hard for you.
Right, it is.
Like,
If you want to make something easy, it's extremely difficult for the people that have to make it easy. Stephen and I, we've started numerous businesses together in the real estate space, and we tried to build a system to manage loans when we were doing the loan company, trying to manage not just the loans but also the borrowers and the investors,
and the projects, like all the way through, end to end.
Yep, end to end, and that was a very complicated piece of software we were building.
Especially like when we got into where stuff would branch off.
Yeah,
right? Like a decision that would either add or remove data. That's when things got exceedingly complicated because you essentially wanted people to push a button and then go to the next screen. The next screen would have only exactly what they needed and nothing else.
Right. Yeah, like if you go to, I mean, most people are familiar with the Amazon checkout process at this point. There's very few people who haven't purchased something on Amazon, it seems.
If you haven't, you're probably dead.
Yeah, or you're getting close to being dead.
Exactly.
You know? But the Amazon system is so simple.
Yeah.
You know, to use. I mean, they even know your preferences and all this
Yeah,
stuff.
don't drink in Amazon.
Don't drink and go on Amazon?
Yeah, don't drink at Amazon. There will be all this stuff at your door the next day.
That should be a bumper sticker.
Yeah, that is like I have friends that do this.
Yeah.
And like so we'll go over like the next day or the day after, and they'll be like they have like this opening space by their door, and there'll be like stacks of like 7 boxes.
Like a foyer.
Outside though.
Ah, like a portico.
This is like a portico. We did the definition of this the other day.
We're real estate guys. We should know what these things are called.
Within their portico is a
Or
Eiffel
porch.
Tower of boxes.
Okay.
From the previous order, the previous night or the night before's order of like, you know what we should get? This sand that's also like Play-Doh that also is magnetic or kinetic.
Yeah.
And then we should buy 5 gallons of it because the kid will really enjoy it.
Absolutely.
Because 3 bottles of wine later, that was a good idea.
And that stuff's heavy. I've dealt with it before. And 5 gallons of it would probably be like 150 pounds.
Poor UPS guy.
Yeah, I know. What are these guys getting delivered? Is this kinetic sand?
But anyway, so the checkout process should be easy. So you make good decisions, not poor ones like that.
Well, I've heard of some folks, in the real estate space. There's some guys that make some pretty decent incomes.
Yeah.
And I've heard of them going on like Tesla late at night, and they end up pre-ordering like a Tesla.
That's good. Casey Neistat was like, I just on a random Tuesday, he's like, I got to explain to my wife that I put a $2,500 deposit down on a Model S. Like, how am I going to do that?
Yeah, it happens. It's.
And look, I was watching that autopilot thing the other day,
Uh-huh.
and the introduction. And I was like, oh man. Mike, it would be so easy to buy one of these right now.
Yeah.
I got super excited. About 3 hours in, I'm like, okay, I could just sleep on the way to work. This would be amazing.
Right. Yeah, because coming into the studio today, I had to, we were on the 10
Yeah.
freeway, and I'm sure there's some folks on the 10 freeway right now who are enjoying the traffic. But I was thinking how nice it would be to be in a Tesla and having it drive me here, and I could just sort of take a nap or something while I'm en route.
Wouldn't it be awesome if you were like going to drive properties and then like you had like, Model 3 is a lot less money, right? You had a Model 3 and you just put 14 stops in, and every time you got back in the cart, it just like drove you to the next place.
That'd be great.
Like,
and I don't see that being too far off.
Well, essentially, like it's ready to launch. So I think they're saying like I think October is the official. There's like a legal date they're waiting for or something.
Yeah, I know for a lot of people it's complicated. That like the idea is great, but they actually have a lot of fear of letting the car drive them.
Well, it's a trolley problem issue.
It's a what problem?
A trolley problem.
What's a trolley problem?
The trolley problem. The one is where. Okay, I'm going to quote this poorly.
Okay.
But it's essentially like if the trolley makes a mistake and there's a switch in the track, one it will kill like this set of people, and one it will kill this set of people.
Okay.
And like which one do you kill? And that's sort of what people worry about. I think is like is the car going to make a decision that puts me in the wall versus somebody else in danger, somebody else on the road? When the truth is the car actually is going to make a totally different decision because the system's pretty brilliant.
Yeah. So hopefully that doesn't do.
Good thing we're doing a real estate tech show.
Yeah, we are. That's what this whole. Because you know how much time I focus on prior to each show, laying out exactly what we're going to discuss.
I was going to ruffle some papers.
Yeah, we don't have any
couldn't
papers.
find any. I was
We're
like,
more or less a paperless office.
It's 42 ideas. Which one are we going to talk about today?
Yeah, so I think we should talk about the future of real estate since we're talking about tech.
So have you talked about because I'm an avid listener.
I know you are.
And I'm sure I just missed this episode. But was there an episode recently about like the economic cycle and affordability and talking about like where the market's going in the future?
We did. We talked about that with Ryan Raven, Chief Loan Officer of Rehab Loan Group.
Right. How long ago was that?
Oh, that was a couple months ago.
You were talking about like what to expect over the next couple of years, and we're not really sure where the market's going and that kind of thing.
We focused a lot of time actually on the previous crash, just sort of catching people up on what happened.
Oh yeah, because they don't know.
They didn't know. So we brought them up to speed. Now we're at the new. With the precipice of the new, economic downturn or whatever. We don't know what's happening.
Well, that seems to be like the. So I was watching. I think I sent a couple of viewers talking about all these videos on the what to expect next, and it's sort of like an unknown.
Mm-hmm.
But all these senior investors, like these guys that have real money that have been in the market a long time, they all seem to be just saying like we want crash-proof stuff that produces a decent yield, and they're not. It's not that they're not buying; they're just looking for. To continue to place money and make sure it will survive.
Mm-hmm.
It's not they're like we're pulling out or whatever, where they're just changing their strategy and continue to buy.
Right. Yeah, and because I think, also I think a lot of the guys that have been in the business a long time, they recognize that the 2007 crash was much more severe than any other crash before, and much more severe than probably any crash we're going to have for a while. So a lot of people I hear say we'll never see a crash like that again in our lifetime, which I think is kind of silly to say, but
I hope we do. I know it's terrible to say.
It's terrible to say, but hey, this is California. We have these wild swings up and down. You should probably get used to it if you want to stay here.
Look, Lord, the old phrase we had to say over and over again, Lord, please give me one more, economic downturn. I promise I won't screw this one up.
Yeah, exactly.
Yeah, I'd like to buy all the property. Thank you.
Yeah, that's going into the last downturn, 2009. I mean, we were both buyers in the market at that time, but we didn't have a whole lot of money, and we didn't know a whole lot of people with money.
And we didn't know how to structure capital. Okay, so have you talked about capital raising?
No, not really.
Okay, so we should probably talk about that because going into the next cycle, let's say that's a slight downturn or a major one, people really need to know that that's probably the most important skill to have. It really is overall in real estate, right?
Yeah,
raising capital.
Absolutely. And, it's something we should talk about. But the first thing we should talk about is
I knew you were going to say this.
Just because if we're going to talk about raising money,
I know.
There's a wonderful organization out there called the Securities Exchange Commission.
Yes.
And these people, they know everything, and they're just so great.
They wrote the book on it.
Absolutely. They wrote the book on how to raise capital. We appreciate them being around, and we just want to make sure anybody out there that might be listening, we're going to talk a little bit about some capital raising from our experiences. But
it's really for entertainment purposes only.
Entertainment,
Yeah.
And we're not trying to teach you. We're not trying to sell you any securities. Never do something like that. This is for informational, educational.
It's and it's anecdotal.
Anecdotal.
Like it's just it's things that have happened and things we've seen, and
we're not selling nothing.
We're not recommending you do any of this.
I would not recommend you do any of it.
You should definitely talk to an attorney.
Of course,
anyway,
and all your financial advisors, all those people with licenses, they spent a lot of money on.
Yeah,
go talk to them. We're just a couple of guys talking about this on the radio.
We have no idea what we're talking about.
We've paid people to do that stuff for us.
Yeah,
actual attorneys and things.
Smart people.
We're just these guys in the middle that watch all this stuff go down and read these contracts and pretend to know what we're reading.
So that being said,
with that being said,
we can actually
let's talk about capital raising now. Because you know what, this is something, and we were talking to another investor friend of ours the other day, and I was saying this is this isn't taught. We don't
nowhere.
You hear other people's money. You hear that as a term, like you should, if you want to do this, you need to raise other people's money or invest with other people's money.
You even hear like you borrow 70%, you get a 20%, they'll say mezz piece, like I say commercial mezz piece. This is what I teach in college, and they have 10% of your own money. Nobody ever says 10% of a lot of other people's money.
Right. Yeah, the 10% down in a commercial real estate deal is not usually the person who's doing the deal's money. It's usually a mix of people, a syndication, which is a really common thing. And it's funny because even a lot of like commercial real estate like agents don't understand the syndication model.
No, they're looking for like a guy with some money that wants to, or gal that wants to buy property.
Thank you.
You clarify.
Yeah, we don't want that HR nightmare here.
Yeah, exactly.
People of all and all sexualities.
We'll throw that. We didn't throw that disclaimer in too. We should just read off 10 minutes disclaimers at the beginning.
The first 20 minutes of the show should just be disclaimers. We don't want to get sued.
Fast forward to 4:27 before you start listening.
Right, exactly.
But I mean, they don't like. They're looking for that person that has a bankroll from maybe a business they sold or cash they saved to put 10% down on whatever size building they think is appropriate for them, which makes no sense at all.
No.
And you're robbing people of opportunity.
Right. Well, that's it's funny because we have this conversation with somebody else the other day where they were we don't get exposed to the type of non-traditional investments out there. Most people have through their employer, they've got a 401k or some kind of, if you're a 403b or a 457, one of these plans, and they invest the money. You sit down with the guy maybe once or twice a year. He puts this nice paper in front of you that has these nice pie charts, and you say
they're all color coded.
Yeah, color coded, man. That's a nice presentation.
That soft color one looks really safe.
It really does. A lot of yellow in there.
Risky.
The one with with all that red. I mean, you're kind of like, do I really want to?
How old are you? Is that the appropriate allocation of your
fairly
assets?
young. Maybe you could put in some more riskier
Sir,
stuff.
I'm not sure about the pie. I'm sorry, ma'am. Have you considered all your other options?
Yep, exactly. And but the thing is, a lot of people don't know that you can only invest those funds through them, and it can only go into liquidable assets. It can only go into the stock market or mutual funds. Like you can't buy commodities.
So fee-based assets. Basically.
Yeah, fee-based assets.
Or fee-based sales assets, I guess I should say.
Right, and they can, and the thing is, they're easily liquidable.
Yes.
So if you want to invest in real estate, in their minds, it's because you want to buy into a REIT, a real estate investment trust.
Yeah.
Which is not really investing in real estate. You're investing in a company
Yeah.
to invest in real estate, but
It's like a distributed commodity almost. It's kind of weird.
kind of, yeah. It's very strange, and they're a really weird structure. If you ever want to look at starting a REIT, they're very interesting. You have to have no less than 100 people.
Yeah.
And a lot of weird rules. They're kind of hard to do. So,
Yeah, it's a lot. There's a lot of audits there.
I love talking to my attorney, and I say, like, hey, I think we want to start a REIT. And he's like, no, you don't. Like, he doesn't want to do that.
He's like, you don't want to do that paperwork.
Please don't make me do a REIT. Yeah, but these 457s, these 401ks, 403bs, like, most people don't know that there is a way to move that money into another type of account.
Yeah.
And that account can be used to invest in real estate. Like, you could buy a rental property, or like I was telling one of our members of the club last night, you could buy a car note, for your friend. Your friend's got a car, they need some money, you can lend them some money, and you hold the car note as the lender. And what's nice about auto title is that you hold the title as the lender. You don't give it back to them until they pay you off.
Yeah, like the last one that we structured, I was like, okay, I'll keep the key and the pink slip and the paper.
Yep.
And then you can sell that package of those pieces together
Yep.
to somebody else, or you can, if you have your money, you can buy it from the person that originated it.
Exactly, and the borrower just continues to make the payments, and in the member's case last night, I was telling, like, they have some money sitting in a Roth IRA. This is, some people
vehicle.
People probably heard this before. A Roth IRA is a very, very powerful retirement planning tool. But in the real estate world, we love this thing called a self-directed Roth IRA, which is it's being held with another custodian. A lot of people have their money sitting with like Fidelity or Charles Schwab or one of these large companies.
Yeah, you got a Vanguard fund you're quietly in. Just like you're blindly letting trickle along.
Exactly. Yeah, and you get your statements every month or every quarter, and you're like, okay, great, they lost me another $250. That was nice.
They just scraped a little off the top.
Yep, and you're like, okay, I don't know where my money's going, but it looks like my employer's still contributing, and I'm still contributing each out of my paycheck.
So it's going up.
It's going up. My balance is going up, but they're also losing some of it from time to time. But anybody that's invested in the stock market right now is probably doing okay. But that's not going to always be the case. Just so you all know, it will take a downturn.
What do you mean? The stock market's doing so good. This couldn't possibly end. Like, how could it turn?
Yeah, I was talking to somebody recently. They're like saying how the stock market's doing so well right now, and I'm like, yeah, I know, but it's when the stock market's doing so well is when I start getting concerned about the stock market.
I'm pretty sure it's down 2,000 points from like 2 years ago. So basically, you're worse off today than you were overall 2 years ago. And everybody seems to be like, yeah, but it's up from 10 years ago. But yeah, but all the people put money in 2 years ago.
Yeah, exactly. Not too bad.
Yeah, it's like, just hold on for longer. It'll figure itself.
Yeah, so when you invest in like alternative assets like real estate, you can't do that through one of these companies. They don't. They don't even know that this is possible.
They have to like check into it. Like the conversation we were having the other day with the guy's like, I talked to my guy and he said like he has to check into this.
Yeah,
and
they don't know.
And my uncle, like his guy that manages stock portfolio or his mutual funds or whatever he had it
stockbroker or whatever.
Yeah, but he was a financial advisor.
Okay.
I think it was at one of the major firms. But anyway, he's like, well, somebody has told me, and it was UDirect, the company we recommend most people to. It's like somebody had mentioned this UDirect company. He's like, and then you told me this same company, and he said he was going to call somebody over there and look into it. And like the conversation between the two of them was like they were flabbergasted by the existence of this.
Yeah.
And I'm like, hey, I just called this person over there, and they'll take care of you. And it's so foreign to these people.
It is, because it's they're not familiar with this. Like they don't know. Like
they don't get paid for it.
That's another thing.
Yeah.
They don't.
It removes their fee structure.
Exactly. So they have no real need to know this stuff. And I'm not going to dump on financial planners because they do serve a very good purpose.
Yeah, they do.
And there's a lot of great
we have
financial
friends
planners
that are
out there.
good financial planners.
They are, yeah. And provide very good returns for their clients. But
and they're really connected to other people, like especially if you're a business owner, other people in the community. They can provide great like resources.
Yeah.
Like in the way bankers do.
But like there's another thing out there. Like you maybe have a buddy that wants to like open up a pizza restaurant.
Yep.
He's worked for Papa John's for the past 20 years, and
he's like the pizza champion.
He knows everything there is to know about pizza,
Yeah.
and he's like, I just want to open up my own pizza shop. But
Like he's at home making dough on a Saturday night, calling you like, check out my dough.
Developed a recipe. It's a
Yeah.
great pizza. He wants to start a shop, but he doesn't have any money to like open up a restaurant. It costs money. You got to buy the ovens, and you got to employ people, do the tenant improvements. I mean, there's a lot of costs that go.
I mean, the minimum wage Papa John's has been paying him for the last 20 years really didn't like cut it.
He didn't get a 401k at Papa John's.
He didn't opt in.
No, he didn't. Bummer. So anyway, he goes to you and he says, "Hey, I know you got a few bucks sitting around. I need like another $10,000 or something.
Okay.
and that'll get me to the point. Like if you have a self-directed IRA, you could instead of calling your guy at Charles Schwab or wherever Fidelity and say,
Well, so actually jargon, or not jargon, but inconsistency. So self-directed anything, self-directed 401k,
Sure.
self-directed. Any of these vehicles can be self-directed.
Yeah, like you could have a self-directed health savings account.
Yeah.
I mean, there's you can self-direct pretty much every.
So essentially, if your money's invested in some other vehicle through some company, there's likely a version of that self-directed. with control.
A lot of people though, like if you're still working at that company
Yes.
that you have the 401k or 457 or 403, whatever you got, a lot of people you can't move it while you're still working
Especially
there.
county and state employees are
It
primary.
becomes a lot more difficult. Some private companies will allow it, but even a lot of them don't allow you to move. So, but there's people I know that have a 401k from a former employer and they still have it.
Yes.
They're still they still have money in it, but it's just sitting there still doing what it was doing.
No, it's what me and Cassandra were talking about the other day. I'm like,
Oh, yeah.
so you have all this money sitting from when she worked for the DA for a decade.
Oh, right.
It's kind of just doing nothing.
Yeah, and that's you can at this point now you can move it.
Exactly.
You could do a 1035 exchange and put it into another vehicle. And you could certainly move it into a self-directed Roth IRA or
and you could invest
traditional.
in a pizza shop.
Yeah, and then you can invest in your buddy's pizza shop. So it's a long way to get there, but so if your buddy's pizza shop, he's up and running, he's making some money, he's paying money back into the retirement account. In the form of dividends or
interest
rent or whatever.
However you set it up.
Yep. So that's one way that your retirement plan can grow. And the nice thing about like a Roth, for example, is that it grows tax free.
Well, you should always consult your CPA. However,
Of course.
the what we've heard is it's tax free.
Yeah, I've heard that. I've heard that from many, 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 many people. But if you ever invest in stocks on the side, that you do have to pay tax on the gain.
Yeah, especially when you get that end of the year, you get that nice form in the mail, and you go, I don't remember making all this money.
Right.
Actually, just the value moved. You're paying money on value movement.
Yeah, exactly. So you have to pay tax on that. But and same thing with real estate. When we do a flip, I mean, we buy it for X, sell it for X, we make X. Whatever that X is that we made, we have to pay tax on that because that's a capital gain. And generally on a flip, you're selling them in less than a year, so we're paying short-term capital gains, which is a higher rate. Than what would be on a long-term capital gain. So anytime you keep something for more than a year, you're paying long-term capital gains, which right now that interest that rate of taxation is much lower. But if you're investing in one of these retirement accounts like the Roth, there are no capital gains taxes. So you can, and I tell the story about one of the guys from PayPal. He invested in PayPal back when it started.
Okay.
And he invested through his Roth IRA.
I mean, that's a ridiculous investment.
It really is.
Like that's such a long. It's just the return versus the original investment is just out of control.
Yeah. So when people complain and they say that that only the rich know about that kind of stuff, it's like because they knew about this stuff and that's why they're rich.
That's
now.
why they're rich.
Like that guy. Yeah, he had some money when he invested in PayPal. He just happened to know some people at the right time. Before this explosion called the internet happened.
Well, I mean, the people starting PayPal, right? The PayPal mafia, as they're known now. They were running around doing a lot of like what we've been doing the last couple weeks. Like, hey, you got any money? Got any money? Got any money? Because we're raising capital, and the conversation always goes to like, so where's your money invested?
Yeah.
And sometimes, matter of fact, actually happened with somebody we've been working with for a long time. He knew we had an opportunity, and he came in some money. He goes, hey guys, I got some money.
Yeah.
And he came in. He's like, here. And the truth is, I mean, I don't pat ourselves on the back. We're not, mega geniuses, but I think our new company's got a good chance of succeeding.
Yep.
And if in his small investment may be worth 10, 20, 100 times his original contribution, and it'd be a complete accident, right? He just liked us.
Yeah, and that's oftentimes how it goes down.
Yeah.
There's I got my phone making all kinds of noise over here. I forgot to put it
Jesus,
on silent.
Mr. Silence.
You know, I'm new to this. I'm going to get it one day. One day I'm going to have it all set up before we even start here.
But
look at that.
But that was, I mean, you know, so this guy with the IRA, right? What do you
Oh, I was just, looking at my Robinhood account.
Oh, yeah, alert.
as we're sitting here talking, Robinhood sent me an alert. So that's what it was.
For those of you who don't know, Robinhood's a stock trading account. It's free.
Yeah, it's a free stock trading account.
Yeah.
I'll give you my username. You can sign
exactly.
up.
Yeah. That's not a bad idea.
Yeah, I know.
It's like the Tesla thing. I want to get like a free Tesla, so I'm like, how many times can I give it that Tesla code?
Yeah, there you go.
Like, to make myself to a free roadster. I think it's a lot.
I'm sure it is. It's like saving up those Pepsi points to buy that, that jet they had back. What was that in the early 90s?
Weren't there actually people that like were trying to turn those in?
I mean, I heard
there was
that.
a controversial.
I don't know if that's an urban legend or what, but
yeah. I just remember that being like an urban legend. Like somebody actually got the jet or whatever.
Yeah, or some kid had like 2 billion.
Yeah.
Like, pull tabs. I don't remember what you.
It was like an absurd. Yeah.
Anyway, yeah. Robinhood, Teslas.
So
those are companies you could have invested in if you had your self-directed.
Yeah, and and you may have known the right person, right,
Mm-hmm.
starting that company, and they happen to be in your ecosystem, which is why networking is so important.
Yep.
And they just come to you and say, "Hey, I need X."
Right.
Right. Like we're raising, we're trying to raise $1 million in the next, whatever 90 days or whatever number they had to hit.
Right.
And they're like, "We want to do all this with." And they give you kind of like a business plan or pitch you based on a deck or whatever the case may be, and you're like, all right, well, I can risk, we always say like maybe 10% of whatever you got to the max you want to risk. So I can risk 30 grand. Here's my 30 grand.
Right.
Well, where's your 30 grand located? Well, it's in my self-directed IRA.
Yeah.
And then you're like, all right, what do we have to do it? Well, we'll call the company for you and start the paperwork process. They'll send you stuff to sign and, and you'll be invested.
Yeah, exactly. And then once whatever happens, a buyout or something happens later on down the road, then you get your payoff, or maybe they start paying dividends. I don't know.
But it goes back into your Roth IRA.
Exactly, into your retirement account. So once you actually do retire, once you're after 59 and a half, you can start taking money out of there. And if it's a Roth, you're taking money out with no taxation, and it's just straight income going back to you.
For those that are wondering why it's tax-free, it's because it's post-tax dollars. You've already paid taxes on that money, so now you're reinvesting it in this retirement, and it's a way for the government to encourage people to invest their payroll money they already received in a vehicle after they receive it.
Right. Yeah, it's just a way for them to capture more tax, and most people aren't going to make a PayPal type move.
No, it's probably an overall benefit to the government.
It probably is,
Yeah.
But even so, you always hear about them potentially shutting down the Roth IRA option. We hear about this every once in a while.
Well, I think I remember the number was like $3 billion is sitting doing nothing.
Probably, like sitting in money
Roth
market
IRAs,
accounts. Yeah.
And these Roth IRAs literally making like no money. They're paying $250 in fees a year, and so. I don't want to quote anybody's fees, but they're nominal, like under $500 a year typically.
Right.
Plus, there's some costs associated with trading, but it's like a nominal cost.
Yeah, whenever you make them have to do something, like review a document, or whatever, placing a new investment, they have to do some work, so they're going to charge you for it. But
it's like $35 or something. It's not expensive,
right? Yeah, it's completely worth it if you're doing it with the right amount of money, basically. So, but what's cool about it is that it opens up people that don't otherwise have access to these types of things. They think, I never get presented with stuff like that because I'm
nobody asks.
I'm a nobody. They'll think I'm a nobody. I don't.
Well, no, like nobody like. So one of the unfortunate parts is I feel like just people don't ask. They're afraid to ask.
Yeah.
And there's somebody wandering around. Lots of people wandering around with like a pocket full of money, right? Like in their retirement account.
Right.
And like, how do I get rid of this money? They're trying to find a place for it, and you're over here like, well, I can just bootstrap my business and work at the pizza shop late at night and suffer through the hours to keep it going. But there's somebody that's like, if they could have just given you 50 grand, would be like ecstatic to be a part of your project.
Yeah. Well, the other thing too, and there's a ton of stockbrokers, there's a ton of like financial planners that know how to put money in the stock market. They're very familiar with the mutual funds and all that stuff, and maybe some of them make good returns, maybe some of them don't. But there's not a whole lot of like investment advisors in the real estate investment space.
Yeah, which is, it's not surprising, right? Because they're selling something else.
Right. But it's, there's definitely a need for it. I'm sure there's people listening right now that are thinking, yeah, but who am I going to call to like give me, like to help me with something like this? Because, I don't know how to do it. And I wish I could say that was me, but I'm not licensed for that sort of thing.
We talked about it. We applied. And then they decided to pull out of the licensing because the compliance was really lengthy.
Yeah, it's very lengthy, and quite honestly, we didn't want to make that our job. If that was going to become our lifestyle, being an investment advisor would be kind of good in a lot of ways. But it's a lot of work. It's a lot of work and a lot of compliance.
Well, so you have to be sort of selfless.
Mm-hmm.
So in our case, we offer in most, I think I can say this, in most of our deals, people make healthy returns.
Mm-hmm.
We don't want to be the person saying, yes, you'll make a good return here, or the return you're looking for, and also be the investment advisor. We want to say, go speak to your investment advisor.
Right.
Here's what we're offering. Find out if this fits, your advice and mix of your portfolio, and you're making the best financial decision for yourself.
Exactly, because of course it looks good to us. We're going to do the deal, but if somebody else can look at it and say, this does make sense. This is a good deal. Do it.
Well, there's some fundamental basics to just about every type of investment, and you could take our word for it, but if we're the person selling the product, then you probably don't want to take our word for it, right? We do our best to be completely honest, but in the end, we're always going to say our project is the best because it's our project,
right? Even though we've never won the Flip of the Year award, I don't know how this has happened.
That's actually pretty funny. Well, I don't think we sandbag it. I just think that because we put the event on, we're like, I'd throw this one up there so we can participate.
Yeah, exactly. We should participate because we're the leaders of the group, but we can't win it. If we win it, then people are gonna be like it's rigged and all that.
It's a little rude. You know what I mean? It's like your own name on your own plaque. They're like, come on.
Yeah, exactly.
It's like when
when Oscar won the Oscar.
Okay.
No, I don't know.
It's like when the coach's son on the baseball team gets MVP. Everybody's like, oh, come on.
Yeah, exactly.
Yeah.
He always gets the game ball.
Yeah. Like, come on, buddy. It can't always be, there's probably extra pressure there. But
right.
So anyway, that's the reason you want to, at least have a third-party person that, and actually fee-based, a person that you pay a flat fee to look over your investment.
Right, yeah, because if you're not paying them, then you're getting the friend rate, which I've found that to be problematic a lot of times.
Yeah, and if you're not paying them, the other side is they're working with the people selling the security, and they're getting a piece of the deal.
Exactly.
In exchange for directing you to the money.
I don't think a lot of people know about that, because I used to, back in the day, I was licensed to sell insurance, life insurance.
Mm-hmm.
And so along with life insurance allows you to sell other products that are sold by life insurance companies, which include annuities. Annuities are, just another investment vehicle type. You can put money in them directly, and there's a lot of cool things you can do with annuities.
And they're really conservative, typically.
But, the investment options to you in an annuity are very conservative, generally speaking. They're going to be in these indexed funds, and they go up when the market goes up, but then they stop if the market starts going down, which is kind of nice because it protects your capital. But
absolutely.
A lot of people don't know that if I move you into an annuity, there are some companies out there that would pay as much as 9% of what I was moving into there. So if I moved $100,000 of yours into their company, I would get a $9,000 check from the company for doing that. And it wasn't hard. For me, it was a few documents to fill out and took maybe 15 minutes.
And the truth is, to sell the annuity, you don't have to be so seasoned, right, as an investor,
right?
That you're offering them world-class advice. You just have to have a license, which isn't that difficult to get.
Well, it was kind of like the neat thing about the annuities, at least for me, was that I didn't have to give advice because I'm like, this is what this annuity pays. This is what it paid last year because this is what the market did. It's just simple facts and data. The insurance company's taking on all the liability by saying they're going to do all these things. I don't need to worry about that stuff.
Well, it's like clerical.
Right.
Just processing paperwork. I'm here to for you to pick which thing you want to check out of the register with.
Yeah, but if you're a stockbroker and somebody calls you and says, "Hey man, I was looking at the other day and I got 3 stocks I'm thinking about getting. I want to get Home Depot, Starbucks, and Apple or something." You're like, "Cool, I'm going to look at these for you and I'll give you my recommendation." You're carrying a little more weight on this now. If you're like, "You know what? I really think you should buy Apple." Okay, so I'm going to go buy it. Well, Home Depot launches some new thing, and their stock goes crazy. So now you're gonna call your broker and be like, "Hey man, Home Depot seemed to do really, really well."
Yeah, where was the info on that one? How come you didn't know what's going on with it?
Yeah, you told me not to buy it, and Meanwhile, Apple hasn't launched anything new, and they're still selling phones and tablets. And,
and it's
where's
just
the new
about
thing?
steady she goes, like per usual.
Yeah, exactly.
The new EarPods come out that are exactly the same as the last one.
Nice, 2.0.
Except with a recharging case.
That's very
or
that's handy.
Or what do you call it? Case the ones you stick on the charging pad.
Oh, nice! It's got the little wireless.
Wireless charging. That's what I'm looking for.
Wow.
Jesus, wow! I not have enough caffeine yet.
Yeah, and you're drinking a Sprite.
I'm sitting there drinking, thinking like, why am I not drinking anything other than this?
That's funny.
Yeah.
Yeah, you could have some whiskey or something if you want.
We don't need to turn it up to that volume, Matt.
No,
Jesus.
not yet. Is it getting too late in the hour?
Well, I just don't want the booth to have to bleep everything for the next 20 minutes. So
I know, it's like, please don't.
They're looking at me like, don't do that.
We got a new board operator today, so he may be our new guy from now on. We'll find out.
We'll have to break him in.
Yeah, we got to break him in one day. When we see us bring the whiskey bottle in, is when he should be really concerned.
Yeah, especially if it starts about a half hour before the show.
Yeah, exactly. But yeah, we got here really early today for some reason.
The Uber driver picked us up at 3, and we just made it out here.
It's just, if we show up in an Uber, it's all bad for you guys. Yeah. So anyway, raising capital.
Social Security.
So back to this. It's I mean, I heard about it, I read about it in books, but even in the downturn 2009, 2010, I was still very unfamiliar with this. To me, like, other people's money was like a hard money lender.
Yeah.
And
you structure that when you go out. It's like, hey, can I borrow X at X? Right?
Yeah.
Like,
exactly. And that's, I mean, not to knock hard money lenders. I mean,
they're great.
It's a great way to go about it. If you got some money, you can definitely do deals that way. But, there's people with capital in retirement accounts, and that capital is just ready to be invested into stuff like this if they know how to do it.
I think it's difficult for people to understand the incentive, right? So like in the in our club, I don't think we mentioned the Inland Empire Real Estate Investment Club.
Mm-hmm.
So at our main meeting, which was last night, it's the fourth Wednesday of the month, there are several people that will come in, and it's their first time. And the look on their face is like kind of urgent.
Mm-hmm.
And essentially it's they're 57 years old. They don't have, they don't have enough retirement. They've got like $300,000.
Mm-hmm.
They're living with the idea of having a little cash, having a little equity, and living on Social Security, right? Because they've either run a small business or whatever their whole lives. And then they're looking to jumpstart, right, to accelerate their retirement.
Yeah.
And what would be ideal is if they get a bunch of, like, let's say, joint venture investments that double their cash in like 2 years.
Yeah.
I mean, that's a huge boon for them, right?
Sure.
It changes their position completely. And let's say they do that for a little while longer, they end up with a 7-figure retirement. Now they have a much better retirement life, and they can maybe choose to do this until they die, because the truth is, quarterbacking a deal from a desk is pretty easy.
Yeah. There's definitely some guys in this space that are in their 80s and 90s that are doing just fine, and they're still actively doing deals that we know.
Yeah, and so there's, I think we used to think of capital like this precious commodity in the same way you're trying to, coax somebody out of money to buy a donut, right? You're like, it's almost like it's clerical. And the truth is, like, it's a partnership.
It is.
And they need you as bad as you need them.
Mm-hmm.
And you should be approaching them with like, hey, man, you want to trade?
Right.
You got a deal? You got money?
Yeah, I got time. You got money.
Yeah.
Like, that's a good partnership.
Yeah.
I'm not going to say that that's always the best partnership.
Sure.
But, there's, generally speaking, you have 3 prongs to a
Yeah.
deal. You got the deal itself, whoever's finding the deals.
Mm-hmm.
You need that person. You need the person that's going to do all the work, all the management and everything. And then you need the person with the money.
Yeah.
And those 3 people, I see that fair, that they split the profit all 3 ways.
And it works out to about a 10% return typically to the so like from all the deals we've seen across the board, the interest rate being paid across all these deals is somewhere around 10%.
Mm-hmm.
And so if you partner, you end up, usually the period of time ends up equaling around 10% if you're just a straight partner.
Right. And there's the other most common joint venture structure is 50-50.
Yes.
One person puts in the money, the other person finds the deal and manages the whole thing.
Yeah, it's usually a contractor deal finder matched with a guy with money that has some experience.
Exactly. And that the nice thing about being the money guy is you're always the guy that does the least.
Yeah.
And
well, you already did the work. That's how you got
you
the money.
did the work, exactly. So now all you have to do is put some money out and then sit back and watch the thing take shape. So
and you're still secured by this asset, right?
Yep.
You're secured by this piece of property. So if the other person in the deal screws it up, you take it over and get your capital back and possibly some interest.
Yeah, exactly.
Or a return.
So I wished I knew this stuff, and the second thing, which is hard, the hard thing about capital raising now is, okay, I got a great deal.
Yep.
You know, but who has the money? And sometimes it's hard to identify those people.
Yeah.
Because you don't know. And there's also...
they don't raise their hand.
No, they don't. You know, and you got to ask. You got to be comfortable asking
Mm-hmm.
people, you know, about their retirement accounts, which, you know, a lot of people are very tight-lipped about their money. You know, they don't like to talk about it. They don't want you to know.
Mm-hmm.
You know, I don't know if they think that you're going to steal it or if you're like going to, you know, set up some kind of plot or scheme. I don't know what the fear is.
I think it's the same way. Well, at least generationally, it's the same way that people are afraid to give out their social security number.
Yeah.
You know, like that it's precious and somehow they're going to get robbed.
Yeah, I guess. I don't know. But, you know, and it's been a conversation we've had with many of our investors where, you know, they're like, I just realized, we're one guy, we never even met the guy. You know, like he was a friend of one of our investors. Like I think it was his brother-in-law or something. And he was like, you know, I just realized I'm about to wire you guys a few $100,000 and I've never met you, you know. And we're like, hey, man, it's not too late to walk away. I mean, if you're not comfortable with it, don't do it. Like, we're not here to do that.
But he's like, no, I've done this a lot of times. I'm fine.
But it was like, you know, it was funny for us because I'm like, look, I mean, we don't know you either. I mean,
yeah.
You know,
What if you're a crazy person?
Yeah, exactly. Like, I don't know if you're going to call me every week now and ask about, you know, how the thing's going and, you know, where your money is and all this stuff. Like, I don't know what you're going to do. So, you know, but another thing I told him, I think we were joking at this point. I'm like, look, I got to be honest, $300,000. It's a lot of money, yes, but
yeah, I'm not excited.
I'm not getting very far from trying to run away with your $300,000. Like, I can't go make a new life in another country somewhere with $300,000.
You wire me $3 million, and I combine it with a couple other people. Maybe there's a number that like would tempt some person who was unscrupulous.
Yeah, exactly.
It would take I couldn't do it anyway, but it would take like an insane amount of money for anybody who has any hindsight or foresight,
right,
to like walk away with your. I just can't imagine people doing it.
Yeah, I mean it happens. So obviously, do your due diligence.
But like rarely, that's the thing.
Right, it is pretty rare.
So rare, and like considering all the deals we see every day, right?
Yeah.
The number of stuff that either comes across our desk, we talk to people about it through the club. I mean, money going missing is like a extreme freak rarity.
It is, yeah, and that's because there's a lot of like checks and balances along the way. I mean,
there's people involved a lot.
Right. I mean, if you're buying a property, I mean, there's some things you should probably be doing. You should probably be getting title insurance. You should probably be going through an escrow. You know, if you're wiring the money, we usually recommend wiring it to the title company directly. Because we heard a story about an escrow company that was a shady escrow company, and they ended up stealing
$600,000, I think.
Yeah, from one particular deal. Yeah. You know, but they apparently stole a bunch of money from other deals
I think it was
too.
Like, it was like 3-something million across multiple deals that came in.
Yeah, so even though like that happened after we'd already had this policy in place to only wire to the title company.
Well, that's what the old books would always say. The old real estate investment books tell you, like, find a title company and send your money to title always.
Yeah, because title, these are like major, large corporations, you know, and if you're dealing with one of the major ones, like, you know, First American or Chicago Title, Fidelity, Lawyers Title, Ticor, Title 365.
These are massive members of other
Stewart,
conglomerates.
Don't want to leave out Stewart.
Yeah, Stewart.
All the folks over there at Stewart High.
There's Orange Coast down the street.
Orange Coast, that's true.
But
there's not a whole lot of them, though.
No.
With escrow, there's like thousands of them in the state.
Yeah.
You know, but with title companies, really only like, there's probably 10.
And they're all related.
Ones. They are.
So for those of you who don't know, like, there's really only two parent title companies.
Yeah.
You know, there's Fidelity and there's First American, and they both own the oldest sets of records known in the United States.
Yep.
They have the stuff going back to the 1800s.
Right. Where the legal descriptions like bring up like, you know, the rock on Tom's old farm.
The stump on the corner.
Yeah.
They also have like horrific racist and weird undertone stuff in it. It's really weird to read.
Yeah, if you ever just want to like get a piece of history, read through like
find like a
policies.
1903 set of CC&Rs.
Yeah.
And you'll just be like, wow.
Yeah, like blatant, you know, like now we have so many rules in place, you know, you can't discriminate based upon all kinds of things, and you know, like there was a time where that was written
in legal documentation.
Yeah, like
that's mind blowing.
And it was written just completely normal. I mean, you know, call me a millennial. You know,
call me a millennial.
But like I'm oblivious to that stuff.
Yeah, it would be odd when we'd see it because you'd be like a one-page set of CC&Rs. So when I was in title, we'd pull them up and we'd send them to the client, and the client you know, title always sends a disclaimer. It says, obviously, any you know, all of these are in place. With the accepting anything that's, you know, federally or statewide legal or illegal, it's, you know, race, gender, blah 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 blah.
Right.
You know, like all those restrictions.
Yeah.
And you're like, well, okay, so like 90% of the CCNR is gone.
Right.
It's like structural size
Yeah,
and
you
lot
just-
size left.
Okay, so I got to put my trash cans away on
Exactly.
Tuesdays. Okay,
yeah.
I got it.
It's really like
That's the only rule I got to
It's
live by.
fascinating.
Good.
Well, yeah, you only have so many livestock and you live in a housing tract. Like,
Yeah,
I'm
exactly.
pretty sure I'm not having livestock.
Yeah, I'd be like, those goats are gonna have to go, I guess.
But so they're so you're sending money to your title company only.
Yep, send your money to the title company. That's one way to protect yourself.
Mhm.
Always be doing it as an
Mhm.
actual escrow. Like, there should
Yeah.
be an escrow account. Generally speaking, you want to see some agents involved in the deal. I mean, there's the more eyes looking in on a deal sometimes.
Ask a friend.
Yeah.
Just ask a friend, like, hey, look at this deal. What do you think of it? Even if they don't know anything about the real estate market.
Yeah.
They may find something that you didn't see.
Mm-hmm. And so, and then if you're doing everything right and you're securing everything properly, the other thing is, like, how do you hold title? Whose name's on title? If you're doing it as a loan and you're working through a broker or a licensed broker, and you're putting your name on the loan, how are you being secured? Is it a first position loan like you would a mortgage on a house? How are they doing it? So those are important things. Obviously, you want to be secured. So,
Well,
do
you
those.
get in the whole, like, Jim has been on the show several times. Ran into an issue the other day where he had an easement on one property.
Mm-hmm.
Actually, Jim, if you're listening to this, you owe me money. I just realized that you're supposed to give my dad a couple $100 for putting together a legal description for him, and I forgot to ask him for it.
Oh, nice.
I have to text him after we leave here if he's not listening now. I bet Lori's in the background laughing, going, probably telling Jim, like, hey, Steven's talking about you owe him money.
Yeah, exactly. Now he's not going to answer your call because you warned him.
Yeah, exactly.
He went out of town tonight. Did you know that?
He's leaving today?
I'm saying that.
I'm like, I think he's leaving in like 2 weeks. Wait.
Yeah.
Well, my dad had left town the day after he wrote this legal description. So
Nice.
anyway, he had this issue where there was a driveway on a neighboring property. Jim owned all three of these parcels.
Mm-hmm.
He needed a legal description written to give an easement to cross one parcel to the neighboring parcel was being sold, and so I called my dad. I tried to write it, and I was like, man, this is really old language. It was the old, like, meets and bounds, and meets and bounds is hard to translate. And I said, hey, I need you to write a legal for this. And he goes, okay. And he just, took him about 3 seconds and sent it over. And he had an ALTA policy, so an American Land Title Act policy. And you can have a California Land Title Act policy, a CLTA policy. And the ALTA policies have somebody go out and do a physical inspection, where a CLTA policy doesn't require that.
Yeah.
So if you really want to be really careful as a lender, you're always going to want an ALTA policy because it covers everything. So it would have missed that easement if you didn't have the ALTA.
Right. Yeah, it actually was funny because I was at our escrow company signing docs, and Jim came in while I was there signing.
Yeah.
And it was because that was all getting resolved while I was there. It was pretty funny. And then we went and got lunch.
Yes. Well, that was, he came into the office, right? And just I'm calling over the title rep for him, and the title rep, it's like nobody was speaking the same language. And then finally, when everybody got on board, they're like, "Oh, now I get what we're doing here." But the ALTA policy, as a person investing in a deal, will protect you far better than a CLTA policy.
So always go for that.
So send your money to title, and then when you get the title policy, and you're going to need a lender title policy.
Yep.
Unless you're a partner and you don't need a lender title policy.
Right.
But if you're lending money, you need a lender title policy, and then you want to get an ALTA policy associated with the transaction.
Yeah. And, talk to your attorney on how to structure all this stuff.
Yeah.
Talk to your CPA on how to actually structure it for tax situation, because that's going to come up down the road too.
Yeah, I don't know anything about that.
Yeah, and I don't want to even pretend like I know what I'm talking about with tax.
We got a really smart CPA. We just call him.
Right. You should have a smart CPA too, those of you listening.
Yeah, if you don't have a CPA and you're trying to invest in real estate or tax attorney or some kind of professional, like, you're already a step behind. Matter of fact, we had lunch today with a gentleman who's been in real estate investing for a long time, and his advice was like, you should be paying your bookkeeper a lot of money.
Right.
And we're like, yeah, we know. Like, you could have problems if you do not pay your bookkeeper
true.
a lot of money.
Yep.
So that's like step one. Know a tax person and know somebody to manage your books.
And, not all CPAs are created equal.
No.
There's a lot of CPAs that don't know about real estate investing, and, they're probably good at whatever else that it is they specialize in. But, there are CPAs that specialize in real estate investments, and, you should definitely find one that focuses on that, because it changes the way your taxes get reported and stuff like that. So
I was talking to a gentleman at Saturday Morning Coffee, which is typically the third, or usually around the fourth Saturday of the month, but it's the Saturday at 8 a.m. at Lift Coffee in Riverside before our Wednesday meeting, which is always the fourth Wednesday. So it's the Saturday before the fourth Wednesday. And I'm talking to him, and he was an officer for a long time. And this guy had done, he did taxes for like 100 and something officers in their division. And he's like, guy told me that I made taxes really interesting this year for him. He only bought like 2 houses.
Okay.
And I said, look, no offense to the guy doing your taxes, but you need somebody else.
Yeah.
I'm like, it's not that he's not a good CPA. It's just that he specializes in like police officers that have ordinary income, and that's not you.
Right.
Like, so now that you're retired and you're onto something else, like you need somebody new.
Right. Yeah. Because buying 2 properties shouldn't be interesting for any
No.
CPA that does real estate.
No, if you're versed in real estate, that should be the most boring tax return ever.
Yeah. Like they probably have clients that bought 2,000 properties or something,
I know, like our CPA, like we'll go in and sit down, and he, looks at our P&L and knocks the taxes out, and then he gives us like this nominal bill for it because it took him like 10 minutes,
right?
And we felt like it was really complicated to get to like to where we got with the P&L, and he's like, oh yeah, it's like some nominal amount of money. I'm like, why would anybody ever not pay a couple $100
right
for like tax advice, and that kind of level of protection?
Exactly. It's like it's worth the cost entirely.
Oh, absolutely.
But hey, I don't know. Hopefully we gave some people out there some good advice today about investing and with other people's money, because it's it's pretty much the only way to do it if you don't have a whole bunch of money of your own.
Yeah.
And that's how most people get their start. So there's books and stuff you can read. There's actually a really good book by Matt Sorensen called The Self-Directed IRA Handbook.
It's a fantastic book.
Great book. If you want to learn more about like how to use an IRA, all the ups and downs and all the ins and outs of it, that's a great resource for it. You can get it on Amazon.
We should do we ever tell people just call the office if they want a referral to like one of the good companies that do self-directed stuff?
I've never made that available, but
we should. So if you have a retirement account and we have some people that we don't know anything about their company other than they're people that we've worked with and people that lend money to us to use them, and we recommend them as a good service. They'd have to explain their service to you. But if you call the office at 951-684-2553, 951-684-2553, Joanna will answer, and then we can recommend you probably to you direct, and we'll give you some options of companies you could talk to if you want to actually take control of your own retirement account.
Right. Yeah, definitely a good idea. Never thought about really making that available, but
I mean, we have the staff, and I'm like, why aren't we just being like, hey, make the solution easy? They don't have to go find them. We know the good people.
That's true. And if not, come to the Inland Empire Real Estate Investment Club. I mean, there's a lot of good people that come to that. We have there was an attorney there last night. There was a couple CPAs there last night, actually.
And Jeff the attorney gave good advice on like a clause that was in a contract that people aren't really considering. And he just said it in front of the room, and I was like, that's a fantastic idea.
Yeah, and Jeff Day's a good attorney. I mean, good guy. He's he shows up to a lot of the meetings, so
and he just gives free advice all night.
Yeah, pretty much. If you're there, if you're a member, he's just there to help. So I appreciate people like that showing up. But for those of you that are like interested in becoming a real estate investor, or if you are a real estate investor and haven't come to the Inland Empire Real Estate Investment Club yet, you should make it out. We're on meetup.com. That's where we have the club like hosted. So we have all the events posted on there, and you can find out all the different things we have going on. The first Wednesday of the month, we have the Cash Flow Game, which is a board game created by Robert Kiyosaki, the author of Rich Dad, Poor Dad. On the Cash Flow Game, we basically play this game, and you get to learn a lot about creative deal structuring. And then on the second Wednesday of the month, we have the Let's Make a Deal meetup, which is our newest meetup, but it's been going pretty good so far, where we in the room.
It's growing fast.
It's growing really fast. Yeah. We had a very good turnout this last month. We had 5 deals we looked at in front of the group. Kind of a Shark Tank style.
You like bidding war, one of them.
Yeah, we had a bidding war like two meetings ago, and but yeah, it's like a Shark Tank style thing where people present their deals and we tear them apart in front of the room, and we try to get those deals funded. So
that's or renegotiated.
Yeah,
and that has happened.
It has happened as well. So come to that. That's on the second Wednesday at the Mission Inn, and then also on the Saturday before the fourth Wednesday of the month, we have the Saturday morning coffee at Lift Coffee Roasters in Riverside on Chicago.
Nice location.
Very good location. Yeah, and we pretty much get the place to ourselves on that morning. So that's a lot of fun. It's just networking, get to know other investors. Everybody's there to just sort of help and learn everybody else. And then we have the fourth Wednesday, which was just last night, but we will have another one next month in May. Come on out to that. That's at the Mission Inn also. We feed you there. We give you some drinks beforehand. Go to meetup.com and look up the Inland Empire Real Estate Investment Club. And we'll see you all again next week on the Flip Flop Investor Show. Take care.
KCAA Loma Linda, 1050 AM, 106.5 FM, and now 102.3 FM.
Attention business owners, you and your customers are listening to this commercial right now. Face it, every business needs customers, even yours. The Sports Circus is a primetime nationally syndicated program that's carried on ABC, NBC, CNBC, and Westwood One News affiliates, plus CBS, Fox, and NBC sports affiliates across North America with coverage from Hawaii to New York. Also, the Sports Circus is available to the 180 million